Hello, this is George, and today I'm introducing my latest addition to my digital download store, Day Trading with Zone Trading Analysis. Over the past 32 years, I've been tasked to develop trading systems for managed funds and individual traders. Half the time, those algorithms that I helped either derive myself or help derive fell into the day trading algorithm category. And there's many benefits to day trading. One, of course, is there's no overnight exposure. When you go home, you know what your position is, you're delta neutral. And you know when you come in the next morning, your account balance is going to be the same as it was when you left the day before. We have a lot of news that flows in overnight. And of course, you have the different openings. You have the European opening and the Pacific Rim opening. And a lot of that input can cause the market to have a knee-jerk reaction. Many times if you use a stop overnight, those knee-jerk reactions can prematurely get you out of a position, a good position. And so a lot of people don't like to use stops overnight, or they don't mind the overnight exposure. But if you do want to only day trade, I thought it would be a good idea to create a simple framework that you could use to test your own trading ideas. What I discovered, and many people such as Toby Crable and Larry Williams and John Hill, is that the old-fashioned breakout methodology, even if it's after a narrow range like an NR7 day, and the market opens a certain amount and then moves a certain distance off the open, it doesn't usually continue in that direction. It usually has a breakout and then a fake out. Sometimes it does break out and keeps going in that direction. Those are trend days, and you can make a lot of money trading those days. And it is important to build that into your ideal day trading system. But most of the time what the market does, it opens up and it goes a certain amount, triggers a lot of longs, and then the weak-handed longs will get out, and after the market retraces a certain amount, and then it charges right back up in that direction. But the thing that I discovered was you have to have two major components to a day trading system. Breakout component for those trend days when you can make a lot of money, and also a counter trend component that trades in the direction of the opposite of the trend. Many times we've seen the market open in the first hour and move up, and then some news or some event causes the market to falter and then go back in the opposite direction. And you want to be able to take advantage of that situation as well. But the interaction of how the market moves on an intraday basis needs to be mapped in some form or manner. And a lot of people like to use what we call zone analysis. They've come up with these support and resistance levels based off of some metric from the prior day's action or prior day's action. The most popular, of course, is the Camarilla equation, where it plots 4 support and 4 resistance levels. The template that we're going to be using today is based off yesterday's midpoint. We're going to create a midpoint, and then we're going to create 2 support levels and 2 resistance levels based off of the midpoint. And I'm going to test a simple trading system or a simple trading idea, and I'm going to program it as a demonstration of how to use this framework and the nomenclature that's included with the framework. I've done a lot of the footwork for you so that you can go in there and basically use string variables. I call them tokens, and you can string these tokens together, and once you string the tokens together, you create what I call a phrase, and based off that, TradeStation interprets it and decides and helps you execute a trade where you want that trade to occur after it's gone through different penetrations of different zones and zone levels. So I wanted to show this simple programming. We're going to do a very simple one to highlight the nomenclature. But before I do that, I want to let you know you get a 32-page manual with the framework. You get a Camarilla overlay, Camarilla level overlay, and you get the midpoint overlay. And I will eventually start creating different modules that you can just take and insert right into the framework. Once the framework is done and you have all the hooks, you have the ability, I have the ability to just maybe update some different examples, and you can feed that right into the framework. That's the beauty of having a framework. But for right now, the framework is it's up to you to create your own modules. I do give you 2 or 3 templates that produce equity curves, and you can use that as a starting point. So, like I said, you get 32 page manual. You get the framework. You get all the easy language code, and it's pure easy language. It's not object oriented easy language, so it is compatible with multi-charts. And you get the indicators that plots the different levels, and it also labels the zones. Up to 2,000 zones labels can be on a chart. So if you've got like 5 years of history, you're going to have more than, and you got 6 zones, that's more than 2,000 zones, because you have 6 per day. So I erased the zones from the old data. So if you scroll back in time, you'll still have the indicators. You just won't have the zone labels. Let me give you an example of what I'm talking about. And here's the 32-page manual. Like I said, here's all the headers, and it's really a detailed manual. I started thinking maybe it'd be a 12-page manual, but I got into it, and I started discovering that a lot of the topics that are introduced, I needed to drill down more into the different permutations of those topics, or drill down into more of a details of each topic. So it ballooned into a 32-page manual. And I hope it's not that long that it bores you, but there's really some good information in the manual, and the manual is definitely a necessity to be able to do what you want to do with this framework. Let's go ahead and take a look at there's the code. Let's not look at the code. Let's look at, first off, a certain day in the es.d. And this day trading framework is really designed to only day trade the 4 day session stock indices. You could apply it to your own custom sessions of crude or whatever. If you think there's enough volume and volatility to day trade, you could of course apply it to that. But for right now, it's really designed for using it on the es.d, the nq.d, the TF mini Russell.d, and also the mini Dow. And as you can see in front of you, this is the es.d. You can see it from the watermark in the chart, and you can see the overlays, the zones. We have zone 1, zone 2, zone 3, zone 4. The yellow line is what I call, it is the midpoint of the prior day. So what I've done is I'm projecting on today's activity yesterday's metrics. Okay, so we have the midpoint. We have what I call resistance 1 and resistance 2, and I have pivot point, or midpoint. I'm sorry, midpoint. Support 1, support 2, and how do I define those levels? Well, in this instance, with this particular template of the framework, I've got this defined within the inputs of the strategy itself. Let's turn it on so we can look at sorry about that. So the zone 1 top formula is the high D, which was yesterday, plus the high D minus the high of D yesterday plus the low of D divided by 2, which is basically the high of yesterday plus the high of yesterday minus the midpoint. So high of the day minus the midpoint plus the high of the day will give you zone 1 top, okay? So every zone, and I have a zone 1 bottom, a zone 2 top, zone 2 bottom, zone 3 top, zone 3 bottom, zone 4 top, zone 4 bottom. And these are all formulas that you can actually create your own formulas by going in there and just inputting the actual easy language right into the inputs, which makes it real easy. But like I said, before you mess up the template, always rename the template to something else. In this case, I'm doing it ZoneTrader Framework Video. Okay, so let's hit cancel. Oh, I do have a profit amount and a risk amount. Stop entry time, I don't want to trade after 3:30, and I've got a range filter of 1.5, which I show you in the manual how to utilize that. In this case, we're not going to utilize the range filter. We will utilize the 2750 profit amount and the risk amount of $800, and we're going to use these levels. Okay, so that's going to stay the same. I'm going to status it off because I haven't done any coding in it yet. I'm going to start that right now. What I want to do is on this day, I see something that happens frequently, and I want to investigate if this happens often, for one thing, and if the frequency is high enough, and if the outcome is profitable. Okay, so I took a snapshot of this screen real quick. And what I want to do is I want to test the idea of the market opening in zone 2 and penetrating into zone 1. Okay, and as you can tell, the market, get rid of that, there we go, stick. The market opened in zone 2, as you can tell by the label. It went into zone 1. So to get into zone 1, you had to penetrate the top of zone 2. Okay, so the nomenclature is based on the penetration of tops of the zones, and in some cases the bottoms of the zones. So what I want to do is I want to test the idea of the market opening in zone 2, closing in zone 1, and then coming back and closing in zone 2, and then eventually making its way down all the way to the top of zone 3, as you can tell, and entering zone 3, and then reversing. I don't care if it's 1, 2, 3, 4 bars or whatever, but I want it to go back into zone 2. Okay, I want to take a long position here. Okay, we had the opening of zone 2, we had the penetration into zone 1, and then we had the penetration into zone 3, and then we had another pullback into zone 2. So I want to buy here in zone 2. On this day, as you can tell, we have the benefit of hindsight. The market rallied really strong for the subsequent 2 to 3 hours, went into a congestive phase, and then rallied again, congestive phase, and then it rallied a little bit, and then it fell apart. It faltered a little bit at the end of the day. Still a nice trade if you buy around this area and you get out here. So I want to show you how to use the framework to enter a trade based off of this information. Now, as you can tell here, the market actually enters zone 1, and then it backs off into zone 2, and then it penetrates zone 1 again into zone 1, and then it finally rests into zone 2. Now, each one of those crossings is recorded, and I call it a token. So each crossing of a boundary is one token. And a token is just, it's in computer lingo, a word, basically a word. And what you do is you take these tokens and you put these tokens together to create a phrase. So every time you create, every time you have a boundary crossing, you create a token or a string of characters, and I'll show you how that works. But in this case, the only ones I'm interested in are the last 2 crossings, okay? But these crossings are special because they're crossing into and out of the same zone, okay? So here we cross into zone right here. We cross into zone 1. We're going to skip the first one. We're going to the second crossing. We want to go, so zone 2 crosses into crosses into zone 1, and then crosses back into zone 2. Okay, that's what I'm concerned with. And then down here, it crosses into zone 3, and then in this case, it immediately crosses back into zone 2. Okay, so how many tokens do I have? Well, I have the cross into zone 1 token. I have the cross back into 2 token. I have the cross into 3 token, and then I have the cross back into 2 token. So there's 4 tokens. And I refer to them as the last X or N levels, okay? And you could create your own word or variable name if you want, but I'm using last in lev. Okay, so let's program this real quick and I'll show you how that works. So we're done with the screenshot. We know what we want it to do. So let's go ahead and do that. Let's go ahead and program this. And what I did was I took the ZoneTrader framework and I renamed it to ZoneTrader framework _ video, and I commented out the code that was in there because there is there's sample crossings in there that generates trades. So I just commented that out. I'm going to start with my own. Now the first thing I want to do is I want the day open zone, and this is a variable and it's predefined. You have to learn the syntax of the framework. Okay, I want to open in zone 2, and of course this is all included in the manual. And what else do I want it to do? Well, I want how many tokens were there? There were 4 tokens, or 4 strings. I crossed into zone 1, crossed back into zone 2, crossed into zone 3, then crossed back into zone 2. So I want my last 4 lev, and that's just the variable name that I use. I want that to be equal to, and here is the nomenclature. Here's the language that we need to use. Okay, I want to describe to the computer what happened and what I want it to understand so it can take action. Okay, the last 4 levels, we're starting chronologically what happened first. What happened first was I had a zone 2 top cross above. Okay, let's look at that real quick. Zone 2 top, which is the top of zone 2, cross above. That means the close was below it, then it went above it. The close of the bar, the prior bar was below zone 2 top. The subsequent close was above zone 2 top. Okay, and this is key. Everything's got to be separated with a comma. Even the very last token, you have to put a comma in there. And I did that to make it easy when you print out the metrics to an Excel spreadsheet, that it'll dump itself into different columns. Okay, so zone 2 top cross above, zone 2 top cross below, comma, zone 3 top cross below, and then zone 3 top cross above, comma. Remember that last comma, that's imperative. You have to end it with a comma. Okay, let's go over that real quick. What do I have there? Well, let me double check my code, make sure I've done everything right. Okay, let's continue on. Let's just go with and before I forget it. Last 4 lev, that's your crossings. That's 4 tokens, okay? I entered zone 2, or actually zone 1. I entered zone 1 by crossing the top of zone 2, crossing above. I entered back into zone 2 because I crossed below the top of zone 2. I entered into zone 3 because I crossed below zone 3 top. And I entered zone 2 because I penetrated above zone 3 top. Okay. Now, what you can do is you can pause the video here and just read that string. Okay, and it'll make complete sense to you. And a lot of times when you program this, it won't do it. 9 out of 10 times, the first time you do it, it won't do what you want it to do. You have to go back and say, okay, what did I do wrong? I didn't define this properly. I think in this case we have. Okay, so I only want to take that trade if I don't already have a zone 2 buy. And I've created an array. And in this array, you index into the array. And this is where you learn a lot of the easy language about arrays and strings and things like that with this framework. You learn a lot with the language. Zone array, and you index into it in the zones, and you can test to make sure is there any trades taking place in that zone. So I'm going to test and make sure zone array indexed zone 2 buy is equal to 0. I don't want any trades in that zone today. If there has, I don't want to take the trade. In this case, we won't because we're only doing 1 trade signal today. But to get used to it, just make sure you test, make sure that zone has the number or less the number of trades you want in that zone. Okay, say you do want to trade multiple times in zone 2. Well, then say you only want to trade up to 3 times, then you would say zone 2 is less than or equal to 2. Okay, but in this case, we don't want any zone 2 buys before we enter this trade. Okay, and we have to and again. And you know what? I don't have to end because that's all we got to test for. Then I'm going to go ahead and hit begin. Always a good idea to begin because we have some bookkeeping. The framework does a lot of the bookkeeping for you, but you have to do some yourself. So what I want to do, I want to buy, right? And I want to give it a good name. And in the manual, you'll understand, even when you go through the manual, why you have to give your signals good names. Let's call this a zone 2 vid buy for video. Okay. Next bar to open. Okay, we know we're going to buy because we're given a market order, right? So it is definitely going to buy. So then what you want to do is go ahead and go into your zone array, index by zone 2 buy, okay? And you could either set that to 1, which I'm going to do, or you could add, you could say zone array, index zone 2 buy equals zone array zone 2 buy plus 1 if you want to allow more or multiple entries in that zone. So we're just going to do 1. And we're going to hit end. And I think that does it. Now, if we did everything right, we'll get that trade. Well, I compiled it and it came up and it gave me an error message, and it's because even though I coded this thing, you'd think I would know the variables, but sometimes you forget. So it shouldn't be zone 2, it's just Z2 buy, not zone 2. We just have to take the word own out of there. Okay. Okay, this time it compiled, which is great, because if it had done another syntax error, it would have been quite embarrassing. So let's turn it on. Remember, I had turned the strategy off. I had inserted it and turned it off. Let's status it on, close it, and hopefully, keeping our fingers crossed, we get a buy, I'm hoping, right here, where the little circle is. There's a lot of stuff going on in the background, so that it may be a little slower. So when you're testing this, if you don't have a fast computer, then you want to probably sample only 6 months of data. When you get to the point where you think you've found a good entry, then you want to go to 5 years of data or more. Okay, lo and behold, it worked. That's exactly what we wanted to do. There it is, zone 2 vid buy. Okay, we had the cross into zone 1, cross into zone 3, back into zone 2, and so we bought that. Okay, so let's see real quick how many trades have occurred for the last, I think I got 4, I've got 4 months, just so it'd be quick. Let's see if we have any more of those trades. You would think there'd be a lot of trades, so, well, you don't have that many trades. Let's see here. We had 4 trades, ZV, and we had 1 on 5. And, oh, we have one into 713, so let's move over to 713 and see if it fits our criteria. There it is right there, zone penetration, zone 1 penetration, zone 2 3 zone penetration, you buy it. Yeah, it didn't do like it did before. Let's look at the chart again. Got to keep that up. We had one in 525, it looks like. So let's look at 525. See if it, and you want to check all your occurrences, not all of them, but a good selection, good sample to make sure it's doing what you want it to do. 525, where are you at? 525. Oh, wow. Should be up coming on it. There it is. It's off your screen. Yep, did exactly what we wanted to do when we wanted to buy, but unfortunately it had a losing trade there. And then the last one is 810. So let's go to 810. So that should be about right here. So this may be a good a good entry. You just have to test. You got to get more than 30 to make it statistically significant. It should be coming up on your screen right now. And wow, look at that. It took off. It took off like a rocket. Went into zone 1, came out of zone 1, went into zone 3. It bobbled around zone 3, some hesitation there, and then finally it penetrated back into zone 3 because that was the last 4 that we were looking for. And it came out and did exactly what we wanted to do. Yeah, I was hesitating there for a moment because this didn't look like it worked, but it really did. Because it looked like there was a lot of congestion here, and it had entered the zone 3, crossed zone 3, and then back into zone 2, back into zone 3, and back into zone 2, and then back into zone 3. Had that been the case, then you would have had more, your last 4 tokens wouldn't match. You'd have zone 3 cross above, zone 3 cross below, zone 3 cross above, zone 3 cross below, and it wouldn't match your token string. But in this case, we got lucky. It never did cross zone 3. It never closed below and above. It came close. So this did fit our criteria. And if you'd had a more practical profit objective, you could have made some nice money on this trade here. You did end up making money, but wow, did it catch it? It caught that rocket right there. Okay, that's it. This is an introduction to the ZoneTrader. This was one simple sequence, and it's up to you to overlay the indicator on the charts and see which different sequences of the penetrations of these levels might turn out to be a winning trade. I'm going to leave that up to you guys. I hope this was sufficient. If you have any questions, just email me, georgepruitt@gmail.com.